Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, August 5th, 2014. Today we had a bounce back day after suffering some pretty good losses last week. Characterizing this as a bounce back because the smaller stocks were the ones that rebounded the best. The small caps were the leaders. That was the Russell bouncing back the most, trailed by the ES, and the Dow was the last laggard. So it's really kind of a little bit of an offer vacuum, if you will, for now, and we'll have to see what they want to do with that. The ES was up 13 handles. The Nasdaq NQs were up 23.5, but the market internals were okay, but certainly by no stretch were they great. We're only plus about 700 issues or so on both sides. So definitely a positive day, but certainly not a banner day by any stretch of the imagination. Let's start off with the Russell, which was the top performer on the day. You can see that we did have an more or less a positive day here. We opened with the gap up, but we're able to close the gap, and then after closing the gap, proceed to move higher on the day. This 1125 area at 4As should be expected to be pretty good resistance. Next level that's going to come into play is the 10 EMA, which is roughly coincident with the 5 level. So key support is going to be Friday's low. Next target overhead is going to be the 10 period moving average. Note that we have not finished the exhaustion run to the downside here. We're only 6 days down, and that we have not finished this 1 through 7 startup phase, which needs to get to 9 bars to get locked in there. The NQ futures were fairly positive. Also, you can see that we're using this 50 period moving average as an area of support. The 10 EMA is going to be resistance near term. That's going to come into play tomorrow, most likely, especially since it is the high of the session. Above that, we also have this big breakaway gap to the downside, which is pretty notable, coming off of range high. So definitely be aware of that. So this gap window here that starts at 39.40 is going to be pretty important. So that's the next area of important resistance. Critical support is going to be Friday's low and also that 50 period moving average. ES futures also snapped back, did not undercut the previous day's range. Neither did the Russell futures. So it's not an outside day back up, but certainly a positive day nonetheless. All the major averages are still below the 10 period moving average. So even though we're trying to bounce higher, we're still short-term negative. By the way we define it here at Tradesight. Key resistance is going to be this 50 period moving average, where you come into contact with the that gap down from Thursday. Bonds were a little bit lower on the day, basically tracing out an inside day. So if we break out above that, that's going to be notable and put this gap fill window into play at about 115.30. If we break to the downside, we've got to travel all the way down to the 50 period moving average or Friday's low to find any meaningful support. Oil futures were somewhat positive because they closed above the day's open, even though they were lower on the day. So that's a camouflage buy signal. So we could see a reaction back to the upside. We are 8 days down, which is the minimum for a return back to the upside here to see some kind of a reflex. So definitely be on guard for that. We're actually short-term oversold, and you can see how the MACD is pretty well buried to the downside here. Gold futures didn't do too much. Gold was basically just inside the previous day. Still short-term negative, down below the closing and settling below the 10 period moving average, as it's done now for about 2 weeks. Key support is going to be at the 2/8 level, which is last week's low, and then more important support is going to be the static trend line. It's just a little bit lower at about 1276. To the top side, obviously, Friday's high, which is roughly the 10 period moving average, is going to be key resistance. If that gets taken out, the 4/8 level at 1312.50 is going to come into play. I want to talk about the market internals now, because they're very important at this point. We're at a potential inflection point. Couple things to keep in mind here. We want to look at the trend, want to look at the put-call ratio, and want to look at the advanced declines. Those are your important internals that really tell you what the market may or may not have in the cards for the move. So let's first take a look at the 10-day trend. 10-day trend is actually nowhere near oversold. Oversold, we've got to get up to this 1.35 area, so we're not there by any stretch of the imagination. So if the market would like to roll to the downside and have a number of more bearish days here, they could do that without being encumbered by the 10-day trend getting oversold. It's actually closer to overbought than oversold right now, so that's definitely a negative for the market. All right, next up, let's talk about the advanced decline lines. The cumulative advanced decline line on the NASDAQ side of the market, that's the lower chart here, is trying to make a double bottom, which could be a positive. You really need to establish that and take out this DTL to the downside, the diagonal trend line, and get this moving back to the upside. So if we do break to a new low, all bets are off, and this is going to turn very bearish, because then we're going to have a broader qualified lower high. Here's your ultimate high, here's your lower high, here's the intermediate swing, and then if we take that out and print a lower low, that'll qualify this as a pretty broad lower high in this, which would be bearish. But for now, just really essentially using the previous level here as support, and needs to be pivoted back to the upside. As far as the New York Stock Exchange side, let me just rescale this. We've clearly broken trend here. We've been in this very well organized trend to the upside. Started to roll here to the downside, and you can see that we've broken trend here. So they really need to circle the wagons here, because the NASDAQ goes first. You can see that the NASDAQ broke trend quite a while ago, but the New York Stock Exchange side had been able to hang on. So if this continues to the downside, that's going to be very, very bearish for the market. But for now, even a retest of the previous highs will only get us, somewhat positive here. So there's a lot of work that the market has to do to really get positive again in the intermediate term. All right, so here's the good thing for the market. The good thing for the market is that on Friday, you can see that they were spiking the put-call ratio. This is the total put-call ratio to the upside. We didn't record that terminally climactic reading at about 1.25, but we did make a new high on the year for the total put-call ratio. So that means that people were scrambling to buy protection, and usually that puts some kind of a bottom in the market, at least in the short term. We didn't get that 1.25 or greater reading that we'd like to see to really have something that we can leg into on the long side. But we do have to respect the fact that a lot of folks were scrambling for protection and didn't want to be long the market over the weekend, and we're trying to get more defensive. So for now, this is close to an important area and an inflection point, but we didn't get that. So it should be no surprise from this high reading in the put-call ratio that we were higher today rather than lower, since people bought protection on Friday. What we really need to see is if we can actually record this climactic reading at 1.25 or greater to get that lasting bottom in place. All right, so here's a look at the sectors ranked from best to worst. The energy names were at the top of the list. The XOY was top gun, followed closely by the oil services. So that's positive. Would have liked to have seen a little better performance out of the transportations. Those are the two late cycle sectors that you really want to see carry the weight here. We saw the BTK kind of high up on the list, but it doesn't really mean much. That's really just a short covering, probably more than anything else. And the semiconductors were okay, but really didn't outperform. Would have been better to see the economically sensitive semiconductors do a little bit better today. Should be no surprise that the XAU is at the bottom of the list. Now the airlines were a little bit roughed up today, and I think that definitely weighed on the overall transports. We're getting some data out of some of the major carriers, so that's still ongoing and definitely affecting the tape right now. But what you really want to see is you want to see the next couple of days, you want to see the transports come on. Today we had the oil services come on, which is good, but you want to see these late cycle things really come into play and to reassert themselves as the market leaders. All right, folks. Don't want to run too long. Did a lengthy internal analysis tonight. Tomorrow we'll talk a little bit more about the sectors individually and look at the charts and talk about where the technicals are as of right now. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.